Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the Midday Market Minute and the FX Rundown. What a volatile day. The word of the day is de-escalation. We started off seeing the equities down sharply early last night. Crude oil, the highest level in months, but we've seen it all reverse back as the situation has been de-escalated. So we'll start with the stocks, work our way through the commodities, and then finish with the currencies here. The S&P traded down to 3181. There's a crucial level of support down here. We've had it on the Morning Express for weeks, right at 3175, 3169, and just above there at 3188. The market hit that, and the NASDAQ hit major three-star support dead on. So check it out. Again, it's on the Morning Express. We have those levels there. Markets reversed back, and then we talked about it too in the Morning Express. You stay out above about 31, 32, 35 in the S&P. It's going to paint a path of least resistance higher through the session. What's crucial here heading into the close now is major three-star resistance. 3159, the record high close, 3259, the record high close, and 3264. We close above there. That's a breakout, and that's going to paint a path of least resistance to 3300. We talked about that in the Morning Express. Don't get in front of that. Now the NASDAQ's already breaking out above its major three-star resistance, and that's going to paint a path of least resistance up to 8900. We're already at about 8850 and above there. So NASDAQ is breaking out and trying to make its way up to 8,900, and then really 9,000 is going to be a target that the NASDAQ is going to have its eyes for, especially with non-farm payroll coming down the pipeline. Today's ADP jobs is another reason bringing a tailwind to the stock market. You're seeing the ADP for December coming better than expected, and then you also had a revision higher for what was the November's read, basically doubling what November had initially printed. So that provided a tailwind as the situation was de-escalated, and then President Trump gave a speech, very presidential, and that also really was lights out, and that was where we saw stocks run and crude turn sharply lower. We've been talking about crude over the past couple days that there's some growing pains to get through here where this thing could shoot higher. Iran is going to have to retaliate at some point, and this has really played very well into a narrative that Iran really just showed face. They had to do something. Basically, these bases were cleared out. Iraq was warned that they're going to attack. In the situation here, they showed face to their country, but at the same time, the U.S. was not damaged, so to speak. And then ultimately, crude oil has started to retreat into this morning. And then once we really saw that the situation was de-escalated, the sellers came in there. Longs liquidated, and that's something we really warned about all week too. Is you're seeing an overcrowded long trade now. There was 300,000 net long on the managed money, and that was the highest level since going back to April, and those longs are jumping the ship right here, and that's why we're seeing crude oil shred through 60 bucks, come within a dollar of being limit down after being sky high overnight. So right now, where we see support, 59.70 area, that's a level we had, 59.70 to 60 bucks. We start closing below there. It's going to paint a path of least resistance down to about 58 and a quarter. So keep an eye on that. But again, the situation's not completely cool, but where we are right now, it's de-escalated, and really with our narrative, President Trump's a deal guy, and that's what he's going to look to, is really to secure a new nuclear deal is what we're expecting here as the year plays out. This is not going to happen overnight. It's going to be a long process, but he's a deal guy, and he wants to create deals going into the election. So do not be surprised if we see a nuclear deal that ultimately brings oil back to the market, or Iranian oil back to the market. Keep that in mind. And then gold. Sharp reversal on gold. We've talked about this. There's not a lot of sellers out there in gold right now because who wants to get in front of that move last night? At the same time, if you're long, you got to take profits on some of this move. You can't be chasing this thing higher. And really, exactly why what we saw today is you see the sharp reversal lower. 1552 is where gold's testing right now. This is the settlement price from Friday. Yeah, the gap price is more like 1556 area. The settlement price 1552. We start breaking below that at Friday's settlement, you're going to see some pressure. Now the ADP payrolls came in better than expected. Also pressure gold. You're seeing treasuries turn lower. Now with that, again, the dollar strengthening, you're seeing less worry out there. The stocks are trading higher, better data. So the treasuries, we like the 10-year, we like gold, but there's no reason to hold a position or look into a position, especially one that's been trading the correct way that you want to see it. We've been long 10-year, we've been long the gold, we've caught a nice move here. We've been long the Swiss as well. That's a good segue into the FX. We've been long these. Don't sit with something just because you're in it. You got non-farm payroll coming down the pipeline on Friday, and gold can go lower. Yes, gold can move down to at least 1530, 1538, and that's not very far away. But if the stocks really start breaking out and we have a blowout jobs report, the risk for gold is down to 1505 area. So yeah, you got to be careful looking at that. And then a lot of these currencies, the dollar is just testing up, dollar index just testing up to resistance. Be careful there, because again, a good number on Friday, you're going to shoot through that 97.5 area, and that's going to pressure the euro. The euro is going to potentially start taking out 111. So there's some real big moves we could see here. We like the Aussie at 68.80, but that's where it is here. It's looking like a nice area of support. Looking at the daily bar, don't force a trade here at the Aussie at 68.80. We like the Swiss, but there's no reason to force a trade in the Swiss. We've been long the Swiss. Let's flatten out. This is a great area, a great time here. Looking out to Friday is to keep your trade time frame very short. Or if you're in something, you've had profits in something, take it. Or if you're wrong on something, just manage your risk. Clear the slate, start fresh, wait till after non-farm payroll on Friday, and we're here to help. Give us a call. Don't hesitate to reach out, 312-278-0500. Remember, futures trading involves substantial risk of loss. It's not suitable for all investors. Thanks a lot, and we look forward to hearing from you.